All right, folks, welcome back. All right, so we are looking at the euro dollar. Yesterday I had a full day of recording. I did some compression for time in the recording I shared last night, so you can see all of that. If you haven't watched yesterday's video, this is probably not going to be as beneficial to you. It's better to watch me discuss the things that I'm going to point out here, which is all hindsight here, but I explained what was going to happen before the fact in yesterday's recording, and you saw the results of it. So there's a lot of members that came in recently for this round of mentorship, and as such, they are on this I guess understanding, and it's really a misunderstanding, that what I show on Twitter is I'm always right and I'm always trading with positive results and no losses. That's not what I'm trying to promote as a mindset here. It would be foolish for me to assume that I could trade with 100% accuracy, but I do have a very good ability, if you will, of picking choice setups, and you saw the history of that on Twitter this year. So nonetheless, I shared a way of using what people think they understand outside the mentorship. They see a breaker, they see an order block, and they naturally assume that this is what's going to happen based on past performance. And everything, like the disclaimer says at the beginning of this video, on every video I do, past performance is not indicative of future results. With greater insights, you can have a greater degree of consistency and continuity with your results. And by that I mean knowing the context of a market is paramount. It's not that one concept of mine is better than another. For instance, I get a lot of questions by way of people outside of our mentorship. They'll ask, what's a better pattern for me to trade? Is it a order block, or is it a breaker, or an OTE? Now, optimal trade entry, they're all optimal. It just means which one fits the current market profile. So if we look at the market structure that's shown right now, this looks like, it's a non-event to most people. To a professional trader, they're not really considering this market at the moment because there's really nothing to do. If you are a scalper, which is what I was kind of utilizing yesterday's market action in between answering emails and setting up new accounts, the components that I teach are universal because price is fractal. It means what we see on one time frame is replicated on all time frames with small variances that wouldn't really upset the model or what would be seen as a pattern on one time frame. It's obviously seen and visible on other time frames. If we understand that the market is most likely to be in a consolidation, that is what we see here now, and I was outlining that yesterday. I knew that if I gave the lesson with the idea that we're going to try to get a full stop out, if it panned out as a profitable trade, I would have been able to show you, how I would have managed that. But the intention was to utilize what is shown in free tutorials and the greater understanding by being in the mentorship. And I gave you some insights about that. I gave you prompting about where certain things are in the mentorship. So if you're new, as I mentioned yesterday, as the PD array matrix, using the discount to premium spectrum for looking for the right PD arrays. And that means, like a breaker or an order block or a fair value gap or anything that I teach, a rejection block. All those things have their place. It's not an ambiguous, I don't know what I'm going to do from day to day. What pattern am I going to look for? I know what I'm looking for specifically every single time I sit in front of the charts. Instantly, in 10 seconds, I already know what market profile we're in. Now, that comes with experience, and you'll gain that over time. The way you get that experience, and I was speaking to one of the members, who's a charter member now, Peter, he and I have mentioned on passing through email or text that certain things that students do post-mentorship, in other words, I say post-mentorship, that means past the 12 months core content, then they're charter members. There are charter members that are doing exceptionally well right now. There are still some from the beginnings of the mentorship group that started in August 2016. There are some of those members that are still trying to find their way, and that is normal. It may not feel normal for them. It may be frustrating for them, but it's a matter of finding your own niche with this information, because I give you the freedom, which many times is like a lot of rope to hang yourself. If given the opportunity to do so, anyone can come in here and just go hog wild and never really come to any organized structure to a trading approach, because they're always going to try to tinker and add something or remove something. So when we do price action models in the charter group, I give you a foundation, a certain premise to build on. And we will continuously flesh those out over the years. There's 12 of them. 2 of them still are yet to be given to the charter members. But in the month of February, we'll be going back into price action model number 1 and building more depth to that one. And then in March, we'll do the same thing for model number 2 and so on. So it's under those parameters that we're going to operate the future of the mentorship. And I'll give you more insights about things that I haven't taught yet, but you have to have some kind of foundation. You have to know what it is you're trying to do in the marketplace. Either you're a scalper, a short-term trader, day trader, short-term swing trader, intermediate-term swing trader, position trader, whatever that is for you. I can't dictate to you as the student what it is that you should be doing. That's a personal choice that you're going to have to make that will help you refine what it is that you're trying to build as your unique trading plan. You're always going to refine it. 26 years in this business, I still find ways where I can refine my personal approach, not the techniques. They're not being changed. They haven't changed in over 14 years, period. The things I have today are intact from 14 years ago. So once 14 years ago occurred for me, that was my model, and I haven't changed or tinkered anything at all. It's just became more precise about when I do certain things and when I don't do certain things. But I'm always doing the process the same. So that's the element of experience that is lacking even with charter members, because they have all this information, just like you're gaining it today if you're a new student. The depth of the information that I provide, you can drown in it. So what I try to refresh your memory is you want to keep it relatively simple in the beginning, because if you try to add too many moving parts, they can be distractions. So with the first month content, I take everyone back to that one all the time. If there's questions, I get an email or whatever, or frustration starts to set in with new students. Maybe they're in month 4 or month 3, and they're thinking that they should already know what they're doing. It's an unrealistic expectation. So I tell them, listen, you subscribe to this process for 12 months of core content with the expectation that you'll have the same language that I have when I talk to a charter member. So that way, if I have a question, I know where to direct them to get more insights or to refresh their memory about something, because you can't go through all of this content one time and think you have it. You're not going to go through it a dozen times and think you have it. You may believe you do, but you don't. It's so much information and so many conditions that dovetail together that I haven't even drawn parallels to yet. That's the ongoing mentorship. Charter members, you get that stuff for years. There's never, I don't really have a timeline when this is going to finish with everything I know. You don't need to get to the end of what I know in the whole completeness of my understanding to do very well in this. So don't think that, I'm stringing you along forever, because once you pay for 12 months, you're done. I'm not. Why would I want to string you along? I would already made the money off of you. So why waste my time? I've already profited. So therefore, be done with it. That's not what this is. My passion is teaching. I want to teach this to people because it's unknown otherwise. People that are outside the mentorship, they do exceedingly well with the free tutorials, but that's just a small little piece of what is to come. And you have to submit to a lot of things that are dry, they're boring. There's going to be topics in this mentorship that you're not going to feel fascinated about. You may not care about stocks. You may not care about commodities. You may not even care about index futures. You may not even care about options. You may not even want to trade Forex, but all the things that I'm teaching are universal for the most part, unless we're talking about options, obviously, because that's an animal in and of itself. But nonetheless, the principles that we incorporate with options, and I will be teaching more about that as well, they adhere to the core principles that the price action models teach. So yesterday, I sat down and provided, because there's no real analysis for the week. I mentioned this on Monday in our discussion. All I had was the calendar up, and somebody sent me an email saying, should there be charts? No, it was just the economic calendar, and I wanted to just remind everyone that this is a really poor time of year, technically speaking, when the markets create, well, what you see here, indecisiveness. It's just simply just building up sentiment. That's really what it's doing. And generally, the first couple weeks of the year operates like an intraday pattern. Okay, we understand that during the Asian session, there is generally a consolidation, and during that consolidation, the banks get a measure on how much sentiment is in the market. And there's an open float that builds above and below the marketplace. It's because there is a gravitational pull for price to reach where those orders are, or where they should be, or where they want to engineer them. Okay, and rewind that again if you didn't hear what I just said, because what I just said is deep. It's not simply a run on buy stops above an old high. It's not simply just a run below an old low for sell stops. There is a narrative that has to be considered, and you aren't going to know what that narrative is just because you went through 12 months of my core content. It takes years to develop that. And the only way you do that is putting yourself in the charts every day. You have to be in the charts every single day. Anything more than 30 minutes a day is wasted time. And yeah, you heard me right. Anything more in your charts per day than 30 minutes, you're doing too much. You're not going to retain anything beyond that point. In fact, it's probably closer to 15 to 20 minutes. But as a boundary, you should not be doing any study of your one or two markets. And yes, that's all you should be watching. 15 to 20 minutes is ideal. Me personally, I do about 10 minutes. I go in, I look at it, I know what I'm looking for. First thing I'm asking myself is, what's the current market profile? What environment are we in? Should this expand higher? Should it expand lower? Should it stay in a range? Are we going to most likely go into a consolidation phase? We are in a time of the year where sentiment is built for the coming several months that goes into the close of the year in December. Investors, traders, geopolitical, macroeconomic forces that are our work, that are so vast in topics. I would never exhaust it, and I don't claim to know all those things, and it's not necessary. I just know that that's what's going on. And once I understood that that's what's going on this time of year, I don't really concern myself with it, because it's not going to provide me the explosive types of predictable moves that we're able to call and capitalize on during the spring and the fall months of the year. There is a structure to the year. If you look at the first couple weeks of the year, think of that as the Asian session on a daily range. Then you have that flurry of action generally. Midpoint of January to the first week of February, there's some kind of a move or a market structure shift that takes place. And that many times, not always, but most times, acts like a Judah swing. So the market enters some protractionary state. It reaches some level of supposed interest. And cable may have done that with making its recent low. And we may see cable trade higher, for the bulk of 2019. Could. Let me rephrase that. Cable, or British Pound USD, might find a bullish stance as we go into 2019. So I don't want you thinking I called a low. I'm just stating that we may have priced in a low, and it may fail to go lower anymore this year. That might pose a problem, especially with the dollar index. The longer we keep the U.S. government shut down, the effects of that is going to be on our credit rating. And as a benchmark, if you will, with other nations, it's important to adhere to a solid performance and not do things like we're doing. Okay, if we're shutting our government down, it doesn't look responsible to other countries. Some countries may look at what we're doing and say, Trump's doing what he needs to do, and others may be thinking that we have a lunatic in the office. I'm not stating either side is right. I'm just stating that the bottom line is the longer we keep the government shut down, the sentiment aspect to that starts to build and weigh on investors. Not that smart money is doing this. They're not saying, well, Trump is thinking this, so therefore we're going to do that. What they're doing is they're waiting for the sentiment to build in traders and in large funds as a result of that. And with that fund, liquidity provides them being central bank, they will do repricing models to offset that. Now, during trending markets, large funds do very, very well. And they are provided the liquidity by the central banks. They provide all that, and these large pools of liquidity that come in the form of large funds, large traders or smaller banks, investment firms and such, they will be counterparty for those. During non-trending markets, like we are in right now, they will cannibalize those traders' stops, and that they'll use their liquidity to facilitate global commerce, transactions for business purposes. They'll make a book for liquidity purposes, in other words, being counterparty, and they will cannibalize those orders. In other words, run the order, hit the stops, hit the liquidity pool, engineer liquidity, and do that to make a profit. Because transactions may not be that. Typically at the beginning of the year, there isn't a lot of spending because there's a lot of projections that's done. Usually the smarter companies and firms, they do a lot of their projections the final quarter of the previous year. Other companies do it at the beginning of the year because they want to see how last year ended and look at projections for what they may do for the coming year. So all those things are like little cogs, little gears in motion that turn the bigger part of the machine. And the central bank waits for all these things to start moving. And then if it doesn't move fast enough for them, then they will stimulate that by either a dramatic repricing, an unannounced rate adjustment. Those things are stimulators. So I would expect things like that to occur if Trump keeps the government shut down, because it's going to cause the markets to be stagnant. And central banks don't want stagnant markets. They want moving markets, because moving markets cause sentiment to build. Sentiment builds execution. Execution provides liquidity, and that liquidity is what they need. So if everyone's sitting on the sideline in the large hedge fund universe and no one wants to participate in a currency move, they have to create some kind of a stimulus to make that happen. And that would be a big explosive move that was unexpected. It may be completely diametrically opposed to what would be reasonably expected. And that's the reason why I tell developing traders and even my free students, don't trade live funds this time of year. You might get lucky, but that's all that it is. It's luck. Because there's no rhyme or reason for a lot of the moves that take place this time of year, typically. Now, yesterday, because of the expectation of the market remaining in a consolidated state, we're range bound, but it had the characteristics, which I'll cover when we start talking about the chart, the characteristics of a possible continuation on the downside. And I'll revisit those when we talk about the chart, but it was a limited expectation on the downside. But I was trying to promote the idea that if I was wrong in my expectation that it was going to go down, but go down further than I thought, I was using a take profit level that would reward me for being wrong. Think about what I was teaching yesterday. I was teaching a finite level of wanting to throw in the towel with a stop loss. That has to be finite. It has to be rigid. It has to be cast in stone where it doesn't change. This is the way it is. I open my position up. The stop starts here, and I do not open it up wider. I look to manage it and reduce the risk, but I don't do that in a rushed manner or a quickened pace to do that, because I want to give price enough room to move and oscillate back and forth and still not tag me or prematurely take me out of the trade. By keeping our stop at a level that is manageable but still does its job of removing the extreme loss if we had a wider stop, or opening our stop, in other words, moving it away from its original position and opening up more risk in terms of money and pips at the expense of making a wider stop. That's what neophytes do, if they even use a stop. I wanted you to think about some of the things that go into making a decision every single day. As a developing trader, you should be in your demo account every single day, learning, studying, engaging, not over leveraging the account to see what you can do, because that won't happen in live funds. You want to use a reasonable amount of leverage, some leverage, because you want to see the effects of it when it's good and when it's bad. Because the lessons that come for using leverage and when it's bad and it hurts you, those lessons are very important for your longevity, because eventually you're going to come to some conclusion that you don't want to stay a demo trader and you want to change this into live funds, and you'll do that on your own decision. I don't say, there's no month in this mentorship that says, okay, now everyone graduates to a live account. I don't do that. I always speak in a demo account because I have protection by doing that, and you're also protected as well, because the only thing I'm telling you to do is trade a demo account, which you can't make or lose money in, but you can gain insights and understanding about price action that will stimulate your own desire at your own time and your own choosing when and if ever you move to a live account. So if you move to a live account, you're going to remember the things you did, hopefully, if you've done it right, the things you did with your demo account that provided consistency. And if you did the things in your demo account with sober leverage, in other words, not over leveraging your account, not over trading it, not trying to do more than you should, not exercising sound money management in your demo account, and then trying to go to a live account, if you haven't managed risk and conquered risk management in your demo, trading with a live account is just going to make it all but guaranteed you're going to lose your account, because you're not going to have the experience to lean on that says in your mind when you're watching certain things happen in your equity or in the market, I've been here before, so I'm not going to panic. So because I don't do a lot of trading in essence, I don't have a lot of losses. So I don't share a lot of those things. But in situations where it would be constructive for you to see how a losing trade could have been formed, which was yesterday's whole context, was building an idea, executing on the idea, committing to the stop and to the idea and the trade, but putting in specific features to that trade idea that can potentially reward the trade well beyond what the trade has framed out. In other words, in a layman's way of saying it, or in simple terms, if your model is to make 30 pips, okay, if that's your model, if you don't allow for capturing a 50 pip explosive price move, you're probably doing it wrong. And what do I mean by that? There's other educators, there's other traders out there that will snub their nose at the concept I use for taking partial profits. But it's proven that if you do this, it's far better to do that, because number one, you're funding the trade, you are paying the trader, you're rewarding the analyst, and you're reducing the risk. You've already arrived at the agreed upon measure of risk to open the trade up with. That's a constant, okay? That's always going to be there. You're going to have an initial risk. But that risk must be managed after the entry or stopped out. So excluding the idea and truth of eventually you're going to get a stop out in your trade, how do you manage the stop? When do you move it? Why would you move it? And where do you move it to? All of those things, okay, I expressed in internal dialogue yesterday's video, either before the fact or during the trade progression. I gave reasons why certain things would be expected in price action, and why price would be expected to deliver a certain way, and conditions. If this does this, then this is what I would think or expect or do. You don't need a lot of those things from me. Some of my students demand it right now. They're like, I want you to do this, or I'm never going to get it. Well, if you think that, then that's true, because you've limited your expectation and understanding to whatever you see me do. I provide you the information to practice. So in your demo account, every single day, you want to go into the marketplace and look and study where is the open float. Open float is the orders that would be resting above the marketplace and below the marketplace. Okay, they're floating above and they're floating below current market price. But you have to have a predetermined range, and I gave you that yesterday. So when we ever talk about open float, it's specific to whatever the current dealing range is. Now, the next question is going to be, where is the dealing range? What is the dealing range? If I'm looking at a 1 hour chart, what's the dealing range? It's not going to be the same dealing range that you have on a 15-minute chart, and it's not going to be the same dealing range that you have on a 5 hour chart. It's not going to be the same dealing range you have in a daily. Everything in price is fractal. So everything that we're looking for, we have to define what our model is. If it's going to be a scalping or day trading model, your higher time frame is going to be like an hourly chart. Your selection time frame is going to be your 15-minute time frame. And you may execute on a 5 or maybe even a 1-minute chart. I operated entirely off of a 15-minute chart yesterday because of my experience. I wanted you to focus on, number one, how you can really talk yourself into a trade, and I gave every reason why the breaker could very easily offer the resistance in here and then sell off. My stop was placed above the order block in here, but because of the spread, it still got it. So throughout the whole process yesterday in the recording, you hear me state I'm not concerned if I get stopped out. Why? Obviously, because it's this demo, I didn't take a real monetary loss there. But from an image standpoint, I can tell you that if I would have taken that trade and didn't intend for it to be, as I outlined it yesterday, an execution for the purpose of, we'll see if it can go lower, but I'm really putting it in a framework where it can get tagged, and I'm offering the full stop. If it stops me out, I will mitigate that loss, and I will show you how I'm going to do it. If you listen to what I was saying, the manner in which I spoke was almost like I knew what was going to happen, because I generally do. It repeats itself all the time. Now, there's sometimes I do get it wrong. Sometimes I'll miss an entry. Sometimes I get stopped out and the trade doesn't go to my full target. Or sometimes, and it's rare, I get stopped out for a loss. But because I don't trade every single day, I don't have a lot of losses to show. It sounds arrogant. It sounds like I'm misleading the public, but that's the truth. I don't want to be in the marketplace like right now because I know the conditions are likely to promote a loss. Who wants to be in a shark-infested water with paper cuts all over themselves? You're asking for it. You're literally asking for it. Remember the analogy I gave yesterday. Larry Williams gave this wonderful analogy of walking down the street in a blue house and a white picket fence. There's a dog there that's going to tear your arm off if you walk too close to the fence. I don't need to get burned every single year at this time of year to know that this is not the best time to be trading. It's not. So if I excel as a price action trader and my models really excel in conditions that have expansion, which is just simply movement, okay, a great deal of magnitude and movement and displacement, energy, okay. When you see that in price action, I am a rock star, and I will be on that stage all day long, every single day. But right now, we don't really have that. We have, it's very muted in terms of price action. It does not mean you cannot practice, because in fact you should be doing it. And if you are practicing right now with your demo account, like I mentioned yesterday, it's not the purpose of showing profitability. When you practice every day, you're not trying to make your account grow. You're not trying to expose it to unnecessary risk and eat it all up too. But you're looking to engage so you can study what price is doing around specific concepts. Accepting going in right away with the understanding that it's probably not going to do very well because of the time of the year. Now, what benefit is that? 5 years from now, you're going to see something come across the news wires, or you will go on social media and someone shared a trade about a particular market, and you're going to look at the calendar and say, oh yeah, it's the 4th day of January. Well, I'm going to get in here and show them how it's done. And then you're going to lose because of some outside influence. You broke protocol and you traded in a time when it's low probability. Whose fault is that you took a loss? Yours. It's your fault when you make money, and it's your fault when you lose money. It's not mine. I don't want that credit. That's why I don't want your credit when you make money. I don't want a high five. Just made 80 pips ICT. You're the man. Thank you. I didn't take that trade. I mean, I appreciate what you're saying, but really also what you're saying is it wasn't my responsibility, and therefore I don't deserve the credit. When you do, you're the one doing the work. So what work is that? What I showed yesterday. So as a new student or someone that is a charter member, one of the things that I gave yesterday was how to approach using the open float. That means where's the liquidity? Okay, there's clarity in viewing the market like that. It's not shown in books. No one talks about it, teaches it, none of that stuff. Okay, you have the same buzzwords. Okay, just like folks are, new people are discovering Chris Laurie because I point to him and I say, look, if you want to learn from somebody outside of me, go to Chris Laurie. He'll give you a good primer. But that's not the end of it. In fact, people that are in this mentorship have already gone through and are still with Chris Laurie. And I like the guy. I got a lot of respect for him. But that's not everything. And just because there's some words that sound the same, okay, liquidity pool. Liquidity pools are not the same. If we sat down and we did a webinar, or if we did a live seminar and people attended, and what's a liquidity pool? If he was teaching his concept and what he was talking about for his thing or his teachings, he would say, okay, this is what we do, and we go look at a bank report and we look at a specific website, and they'll tell you where pools of liquidity are pooling, okay, or building up. I don't do that. I tell you how to find the liquidity in the price. There's specific things and characteristics that I do that have been this way for over 18 years. Okay, 18 years I have been using what I call a liquidity pool. It was my manipulation, stop hunt, and shadow box. That's what they were. I call them shadow boxes because they would run up, hit these orders, okay, and then once those orders were hit, people were stopped out, and then the real move would happen. I learned that from trial and error and losing a lot of friggin' money. I had to turn everything I was doing upside down. I didn't go through someone else's teachings and say, let me just change the name of that. No, my stuff is from real experience. The things that I learned from other people, I've been upfront and told everybody. And the only thing I learned from Chris Laurie was the Asian session time window. And I took that information and put it on steroids. And you learn that in my teachings. You don't see Chris Laurie or anyone else doing things with the Asian session or Asian range like I do. And my time parameters are different. Why? Because it's based on how the algorithm operates. In midnight New York, that's when the real world starts. Whether you like us in the US or not, we set the stage for all of the markets, period. I don't care what anybody says. The volume is in London, yes, but it's still hinging on what the dollar's doing. And that starts at midnight New York. There are similar characteristics to the order blocks. And when you see supply and demand stuff, like if you go online, you see Sam Seid and Online Trading Academy or whoever, and they talk about supply and demand. First assumption is when you see me draw out a chart, oh, he's doing supply and demand. No, I have students with me that have studied extensively the supply and demand concepts and went through Online Trade Academy, and they will tell you what you're learning here blows that out of the water because it's precision, it's price action precision that is unrivaled. You cannot fully appreciate it until you are immersed in it. So when you come in and you sit down with your first month content, it's going to feel like you should know this already. And that's impatience. It's very important to keep that at bay because it's going to resurface throughout this mentorship. And it's going to resurface once you go through the 12 months core content and you're a charter member. You're going to feel like I should know this or that by now. And that's still a very myopic perspective because you don't know where you're going to be 5 years from now. You don't know that. I didn't understand where I am right now. I didn't understand the depths of what I know now as a destination when I first started. I didn't even know this was even possible. I didn't believe it was possible. I knew there was people out there that knew more than I did, but the epiphany I had by studying these things every single day, doing what I showed you yesterday, that very thing is what you do every single day. And the results, you log it. Your observations, you don't use any adjectives that are emotionally charged, like, I was stupid, I should have never did this, I'm never going to get it, I'm confused. Those things do not make their way into your journal, because what they're doing is seeding toxic thinking. You only want to talk about the facts. You want to, like if you were giving a testimony to a police officer about a crime you maybe witnessed, they're not asking you how you feel about it. What's your opinion about why he did this or that? They don't ask that. What did you see? What did you hear? Who was it? What did it look like? Who did they go with when they left the scene? They specifically deal with the facts. So your journal needs to be bullet points, not essays. Just simple little bullet points of things that were in your mind, what you were expecting, and then the outcome. Period. It's just the facts. It's not wordy like this video is right now. But you have to be trained, and you have to have a paradigm shift mentally and psychologically. And it doesn't happen by bullet points, okay, from me. I have to give you the logic behind that. And that's what 12 months of this content provides. It provides me a way to speak in a manner that we are on the same wavelength and the same language. So in charter membership content, I can speak to you about things without having to go through this much animated commentary to overemphasize, because you're not paying attention. You're probably doing something right now. You're off wondering, when's he going to talk about the chart? And you're not going to do well here. If that's exactly what you're doing right now, you aren't going to do well here, because it requires you to think and pay attention, and it's going to require you to do some work. The work is you going into the charts, marking them up, because otherwise it looks like this. What happened? If you don't have the understanding of what I'm telling you to do every single day, and not gleaning the experience that comes by doing it, you are wasting your time. You're not wasting my time. I'm going to be doing this regardless. But you're wasting your time. And you don't want to waste your money paying for this course and being a part of this mentorship and waste your time and your money, because you're going to lose your mind then. You'll be like, I should have never did this. And I had people from the first group do that. And it's not my fault. It's because they didn't do what they're supposed to be doing. I have a lot of depth in the content, and I have a way of allowing anyone that's willing to sit down with the concepts to flesh out their own unique trading plan. And it won't be the same as any two in the group. It'll be their model, and it will be profitable because they have created it around their own personal characteristics as a person, their personality, the time windows that are available to them for trading, and their risk thresholds. Everyone's going to have a different threshold of what they're willing to assume as risk and or opportunity. So the first month's content, when I teach you a low resistance liquidity run, that is the hallmark of how markets work. I started with that content for a reason, because if you didn't get hooked with the first month's content, you're not going to do well here, because you're looking for something that isn't going to satisfy you. You want signals. You want me to hold your hand and put you in a trade, make you money, so you can go on social media and show everybody you're doing well. But you didn't earn that. I did. I'm not promoting that here. I'm trying to teach you to be an independent thinker. So you can say, Michael, I appreciated all your time, and I love listening to your videos, but I don't need to watch you anymore. I can do this on my own. And I ain't going to hurt my feelings. In fact, I'm going to puff my chest up more than it's ever been, I'm going to walk around the house like a peacock in front of my wife, and she's going to shake her head like she always does, but I'm going to be proud because that's the outcome I want. I don't want you wanting to be around me all the time. I don't want that. I want you to say, I learned. I'm thankful. I appreciate it, but now I'm on my way, and I'm doing what I got to do. And that's the graduation here. When you no longer need to hear what I'm going to say about a marketplace because you already know. That's what I'm teaching you. You don't want to subscribe to other people, and you don't feel the necessity to come back to me on a weekly basis because you want your commentary and your expectation on Saturday or Sunday to be, if not verbatim, what I'm going to say on Monday's commentary video. That's what the goal. When you're consistently doing that, you've arrived. Then you know how I'm thinking. You're not going to go on Twitter looking for my latest tweet about something. Because if you look at what I'm doing on Twitter, I'm really not doing that. I'm stimulating the people to study those free tutorials and stay in action. But I'm not telling them anything. I'm not. Here I am. I'm teaching you. I'm telling you where the market's going to go. I'm explaining why it should do it. There's a strong contrast to free tutorials and Twitter experience with ICT and in being here. I don't really have an invested interest in the success of everyone. I am obligated to everyone here. So there's a different measure of consideration. I spent a lot of time worrying about other people's opinions, 10 years ago. And it was not productive for me. I spent a lot of time worrying about people that I was convinced if I just did more for them, they would learn it, and it didn't work out. So I have to cut ties. If people are going to be lazy or just toxic, I have to cut that out because it starts to impede on me as a mentor, and I have to be realistic too. Just like you have to be realistic. You may come into this and you may get to month 1 or 2 and say, you know what, this isn't really for me. And that's fine. That's good. You decided early on that it ain't right for you. But don't assume that it ain't right for you because of not putting the work in. And that means every single day you need to be in the charts, either in hindsight or live, preferably, and seeing the things that I teach. And you'll quickly see them. They're there every single day. The problem is, does it promote the opportunity for you to find a trade in? Because if it doesn't give you enough room relative to the amount of risk that's necessary, it's not high probability. It's not logical for someone to sit down and say, okay, I'm going to put my time and energy into the marketplace today to get 17 pips, risking 15. To me, it's just not worth it. Can I do it? I can. But is it worth my energy to do it? No. I'd rather wait for a period of the year where it's just like really exciting. There's a lot of volatility. It's moving all over the place. A lot more people are involved. The liquidity is there. So I know where the market's going to reach for. Low resistance liquidity runs become like candy. You just reach out and take it. When it's like this, it requires you to know a lot more about the marketplace. And yesterday, that's what I was trying to highlight. So let's get on with it. The current price action in here, we still are within the range. We had this nice drop off here, as I mentioned yesterday before we get into the trades. The premise was that we possibly made a high of the week. Now, think about what I just said here. We possibly made the high of the week on Tuesday's London Open. Possibly is not completely and utterly immovable. It's a potential. The likelihood is there, but it's not for certain. So we're trading in the gray area of uncertainty and probabilities. There's no thing in my repertoire. There's no technique. There's no concept that makes you more profitable than everyone else. That's experience. I'm going to give you the tools to help you cultivate that, but you have to get that on your own. And that's by way of studying, putting in the time in the charts. Because after you see these things over and over and over again, you learn it. It's like when we were in grade school and we did flashcards. That's how we were trained as children in grade school. The multiplication. We had a multiplication table, but we didn't remember or memorize a multiplication table. We remembered flashcards. 2 times 2. They would show you the card, you would give your answer, and then they would turn the back of the card and show you were right or you're wrong. What's being done there? You're activating your reticular activating system. You're remembering the things that you're stimulating, and you have to keep doing this over and over again. You're programming yourself, which is really what school is. They're programming good slaves. Only know so much that's necessary to do what we want you to do so you can earn income, be taxed, and never amount to anything. Here, I want you to use that same thing by repetition, looking at price every single day, doing the same thing every single day, looking at how price works within a specific time window, what manipulation factors are there, what return to fair value is there, what internal range and what external range liquidity it targets, or used as an entry technique. Those things, it sounds like a mountainous amount of things to learn. And it is, in an all-encompassing manner, it's a lot of stuff. And I still have a lot of things to talk about. But you only need a few things, like I showed yesterday, to formulate your complete model. Money management, stop placement, targeting, entry. Once you're in the trade, what are the managing factors? What are you looking for? If they don't materialize, then you have a choice. You can cut the trade, reduce the trade size to reduce the risk, still hold on to it, or let yourself get stopped out and not worry about that stop, because there's a method of mitigating that. It may not happen in the same day. It may not happen in the same week when you mitigate the loss. That's not the important part. The important part is a loss is not the end of your trading career. It may feel like it because you've over leveraged and you blew out your account on one trade idea because you just need to feel good about something and hit the lottery. If you feel that, go buy yourself a scratch off. It's cheaper. $2 or whatever they cost. Go out there and scratch it off. And if you win, great. If you didn't, who cares? Because you did the same thing instead of going out there with your live account trying to over leverage something and get a lottery win. That does not constitute a long career or the pathway to a long career in trading. They're foolish things to do, but you do them still, and you need to stop doing those things and be responsible and replace those bad habits with good habits. I'm only good at this by the grace of God first, but because I put a lot of time and energy in wanting to be good. Like, I really, really, really wanted to be good. Do you want to be good at this? Or are you still dabbling? If you're just dabbling with this, you're not going to do well. But if you're absolutely passionate about getting this and understanding and being realistic about your development, you want to be better than you were yesterday. And I said this on Twitter today. That's your goal. You want to focus on just learning a little bit more about yourself and the markets than you knew yesterday. If you do this over time and you look back, and the only way you're going to appreciate that is if you use a journal. You'll be able to see how you spoke about the marketplace, what your intentions were as a trader, or what you were doing in the day before you took the trades. You're going to see growth by looking back at that. If you just did trades, either with a demo or a live account, the only thing you have to look at is the bottom line in each individual trade. But you probably didn't do any annotations on your chart at the time. You just went on a whim, some gut feeling, or you followed somebody's advice, or maybe even mine, and you did something. You're not learning anything by doing that. So you have to be structured in your approach to studying, retaining the insights that I give you conceptually, exercising those concepts every single day. And it makes your mind more focused on the things that take place in price action, because they're there every day. But the range may be too small to really offer up enough interest for me to participate in. But yesterday may be what everyone is looking for. I don't know that. But if you're a scalper, yesterday's video is like gold to you. But I'm here to tell you before we go into the charts, and I know I'm going on, but all these things are important. They really are. I wish I would have been told these things when I was coming up as a trader. If I would have learned what I'm telling you right now, I could have saved myself fortunes and emotional breakdowns and lost relationships. I would have been in better health today than I am if I would have learned this early on, because it caused me to have a lot of medical problems because of it. You know, it's one thing to be hurt financially, but to have a warped perspective on life because of that pain, that's misery. And that's what the markets gave me also. You don't hear a lot of that, but I hint at it in my tutorials because I was that average Joe. And everything in terms of the pain thresholds that you go through, they were all lived through by me in a lot larger scale than you might realize. So I learned lessons from that. I have scar tissue all over my mind from the pain that I inflicted on myself. All of those things are avoidable if you just listen to me. So when we look at price action, we have to, number one, think, where could price reach? Both sides. You start initially with both sides. Not to have, okay, well, here's plan A, and if that doesn't work, I'm going to do plan B, which is the opposite direction. That's a neophyte perspective. That's somebody that just wants to be in the marketplace to be right about something. And usually it's going to be people that are trying to sell a service or a subscription plan because they need that money coming in every month. And they want to be able to show something right away. Because the faster they get the subscribers into something else, the less likely they are to remember that they just blew out the last 20 calls they just made and nothing's working. And then the one time that something does work, that's the pony that they put in front of everybody, and they parade around with that. But no one's paying attention to, it was just a classic in magic, it's misdirection. If someone can have your perspective over here, when the work is being done over here, you're just completely deceived. And we're not trying to deceive anyone here. There's real risk here. There's real opportunity here. But it's also real work necessary. So let's get into it. Open float. And let's get our notations on here. And get this ball going. All right, so this is what my chart ended up with. This is how a classic notation would look like in my journal. Nothing more than this is necessary because I understand what I'm looking at, the narrative there. We looked at how Tuesday, over here, had a potential high of the week in London. Put the day dividers on. Okay, here's our day divider, and then we had a high formed, and then we had a nice sell-off in the London session, and then New York had a continuation lower, and then we had these pseudo equal lows. And I mentioned how yesterday I felt that this run down below it was too shallow, and we would look for a minimum of 10 pips below it, but we also did some calibrating on that level, which brought us to 113.75. So again, this is the reason why I say go back and watch that video. If you're watching this without watching yesterday's video, you're doing it wrong. So if we use the actual low and then 10 pips below that, that takes us down to here. So it's a 10 pip grade stop sweep. And you can see that's where we went. The initial trade idea was this is the level of content understanding that free tutorial members have. They see this and they say, okay, I'm going to sell it here and I'm going to put a stop loss somewhere up in here. Okay, maybe above this swing high, whatever. The fact that we don't incorporate, or I didn't incorporate, the PD array matrix is what made this trade low probability. That was the whole context of what I was showing you yesterday. Even though you can see something that you can argue and twist and contort to make it sound ICT, okay, Inner Circle Trader approved, there still has to be a measure of the algorithm's influence on price. and that is by defining the dealing range, which is, again, this high and this low. So we have to get at least to or above equilibrium to cause an imbalance. And that's the reason why I said that if I get stopped out, that's okay, I'm going to mitigate, because I already knew what the key level was going to be, and it was that order block, which is the only things I was talking about in that whole exercise yesterday. The breakers I mentioned over here and here, and then this order block. Everything else was liquidity based. So what I was showing was I was looking for internal range liquidity as an entry and targeting external range liquidity. I was looking for a run down here. So the framework was I was wanting to see the algorithm reprice down below here because I felt that this was not sufficient enough to gather any of the liquidity. So we mapped out 10, 20, and 30 pip grade swings where they would go below this low, and that's what these are here. Okay, and they still may be used today, and it looks like it may want to make a run for those today, but I'm not going to participate because I already told you we're in a low volatility period of the marketplace, and it's just too much time to manage such a little move. I'm not worried about it. So the stop loss I allowed it to be taken yesterday. Again, the details are here. So we had a full stop here, and we had equal highs formed in here. But I mentioned in London close, and if you'd missed this yesterday, this is your prompting to have it in your notebook. When we're in consolidation periods or consolidation days, London close many times starts the next price move or next price swing, especially if it's going to be a continuation. And the theme was, the narrative was, we were looking for a deeper run on Tuesday's low. So Wednesday we had a open, trade up, and then down and up. This was the Judas swinger here. It cleared equal highs, so we had buy side liquidity drawn 2, and then dropped off, traded in here, boom, little mini breaker. If you go down a 5 minute, that's what that would be here. Then it sells off. Price comes right back up. I noted the bottom half of the bearish order block because that's where generally my entries are going to be. We have to always encapsulate the entire order block because that's how far it can still trade against us. And you can see that's exactly what it does in here. My other entry to mitigate was on this candle as it was butting up. I just missed it. If you watch the recording, you'll see it. I hit the execution as it was touching the order block body. And then it filled me here. And I had this much of a drawdown. So one of the things I didn't include yesterday in the recording, I mentioned the amount of time or duration the trade was operating in. One of the other things I like to have in my journal is how much of a drawdown in terms of pips and money for the trade that I suffered. And you'll see initially you'll get a lot of stop outs when you practice. And eventually over time you'll improve and you'll see less stop outs, or when you do get stopped out, it'll be after you've adjusted the stop and you manage the risk. Over time, you're going to see you're going to be having a lot better entries and very little drawdown. So the high on this candle, the highest point at which it moved against me was 1411, and my entry was 1408. So we're only talking about 3 pips. 3 pips. That's it. That's very, very tight, considering the sloppy mess that we had to work with. But there's still an algorithm, okay? The algorithm doesn't say, oh, it's a sloppy day, so I'm not going to do anything. I'm just going to stay sideways. No, it's moving. It's going to move. Everything you see in this chart here, even though it's a 15-minute time frame, I understand the ranges are tight and they're small, and it's not worth it for me to get in here and really try to push it hard because I don't need to. Now, as an educator, I need to once in a while to prove that this is a market condition that still can be exploited. It can also be used to mitigate a loss. Now, it's not probable, highly probable, to try to mitigate a loss in this environment. It would be better for you to just sit on your hands and wait, then get your money back later on. But because I'm ICT, I got to be ICT. So it's to prove that I am the author and creator of these tools. I am proficient with them. That's the only thing I show with my examples. I can do this every single day. With live money, it doesn't make a difference. It's the same stuff. But you're here to learn. You want to learn conceptually how I think, how I internalize the marketplace. Those things are transferable. When I trade and how I trade with live funds is not transferable, because what I'm willing to do in terms of risk and what I'm trying to accomplish is not going to agree with everyone. And that's what gets people in trouble, trying to force other people into a specific mold. I don't do that. So I give you the tools to be able to do it on your own, and hopefully over time, how much time, I don't know, but it's going to be at least 12 months. 12 months of practicing, and then you'll see the fruits of it. 6 months for someone that's gone through many, many years of free tutorials and understands that content level first. But if you're new to me and you came here and you're in the mentorship now, you really won't get the feeling of you're improving measurably until you go on 12 months of practicing, because you need to see a full calendar year. It's not because I'm tricking you to stay here for 12 months. Because listen, if you don't want to be here, don't be here. I don't need your money, but I do need you to pay attention. And the full spectrum is a full calendar year. You need to know when the seasonal tendencies are in force, when there's a less likelihood of large moves, where we are right now. So by having a full calendar year, you have a full understanding of, between January and the last day of December, what is the monetary cycle that takes place every single year. Because it's the same thing every year. Every year it's the same thing. Small little nuances that come in. It may look like it's distortion, but it's still the same thing every single year. I already know what I'm going to be doing in the month of November every single year. I know what trades I'm trying to take. I know what's likely to form. I know what trades I'm trying to take in May, and they're the same trades every single year. These things repeat themselves. Well, in the same manner, when we look at price action like this, these things repeat over and over again. If we dismiss the fact that this is a 15-minute chart and say this is a daily chart, how's this any different conceptually than what I'm showing here on a 15-minute chart? It's all liquidity. It's imbalance, fair value, liquidity, internal and external range liquidity. And you'll learn about those things in the mentorship. You'll learn about where to plug and play those things together to get a system, a method, a plan, and a model to work within. But it starts with open float. That means understanding the existing liquidity above and below the marketplace. Once you understand that, everything else will fall into place over time, because I give a little piece of the puzzle each month. Once those puzzle pieces are in front of you after 12 months of content, then in the price action models, I give you a foundation, just like I gave you yesterday. This was all access. Charter members didn't see anything different than you are seeing it right now. And they're seeing the same thing and hearing me say the same thing today in this video. Those links that you're seeing in the mentorship weekly thing, unless I specifically say there's a lesson in here, come back to it. I think there's maybe 2 or 3 of them I did that with. They're the same video. You're seeing the same. I'm not doing 14 different videos, because there's different levels of mentorship levels right now, and they're all different. You know, some people are at month 3, other people are closing in on their last month. I'm making one video, but in charter membership, I give models and I let them work with that information for a little while, and then I come back and I amplify a little bit, or I share a chart, and then I build on it. But we're going to go into February, and we will be revisiting price action model number 1, and I'm going to build up more on that one. So over time, you're going to have really, really in-depth, well-written, planned out trading plans. 12 of them. And you don't need 12, you just need 1. But you're going to use those 12 to find out where you think as a trader. And then you're going to go there and you're going to bloom. All I'm trying to do is help you decide where it is that you're going to go as a trader, because you may not feel like you know where that is. And that's because you haven't been engaging price every single day. Even if you're not going to be a scalper or a day trader, you need to be doing the things that I did yesterday. Because everything you see here, if we change this to daily up here, or put a little D up here for representation of Eurodollar daily chart, and every one of these candles represented a full daily candle, everything here is the same. So instead of trying to capture 15 or 20 pips or whatever a move, this may be several hundred pips. If this was a weekly chart, this could be thousands of pips. So it's a matter of perspective and understanding how you're operating in the present fractal, because what you see in price action here, represented in a 15-minute time frame, can be seen in the same manner on a monthly chart. And then we're talking about enormous price moves, huge amounts of price moves and magnitude that mega trades are formed on. But if you don't start with a intraday chart to see how price moves and seeks liquidity, rebalances, creates imbalances, seeks internal range liquidity, seeks external range liquidity, all of these transitions, okay, they are organized. It's not chaos. Remember, before I put all this lipstick on the chart, it just looked like a sloppy sideways mess. But now suddenly it makes a whole lot of sense. Everything in this chart was told to you before it happened yesterday. Everything was talked about. I explained. I pointed to certain things. All those things were there at the time of the recording. Now, you're asking probably, if you're new, why do you do this as a live stream? Because I already have people ripping me off, okay? And I don't want to provide signals. I'm not trying to do that. Because if I do anything with a signal, someone's just going to just replicate that, and then they'll just, basically abuse my time and energy and profit off of that, when you should be profiting off of the utilization of the concepts, not marketing them. So the context was, we had this daily range high here and low here. We mapped out the equilibrium, which is the midpoint, and we had this run to the order block, stopped dead in its tracks. Yes, it stopped me. We already talked about yesterday. It was already agreed upon that if I take the stop out, I will mitigate it. So I wasn't worried about it. It was already planned. It was there. Everything happened as I outlined. In the portion of the trade journal, I said that I was going to use that same order block to mitigate the loss and keep the same framework, that I wanted at least 10, 20, 30 pip run below this low, because this wasn't enough. Tuesday's high, likelihood, that was the framework or higher time frame condition. Order block entry, 3 pips drawdown, several, less than a couple hours in terms of hold time before we moved into a profit and stayed in it. Then we moved right back up into, and this is the real hallmark to what I teach. There's buzzwords out there, and they've been around for a long, long time. Order flow. Okay, everyone assumes, they think that when I say order flow, oh, it's this, it's that. And they have no idea. Unless you study with me, you don't know. So when I say equilibrium, oh, equilibrium existed before you. The term existed, yeah, but not my utilization of it. It's not there. It's absolutely not there. So the idea of equilibrium, where it came from in my concept or concepts, started and originated with George Angel. He's the guy that taught me how to trade the S&P initially, and then I started adding all these things that I learned from my own personal experience, using gaps. The whole concept of liquidity void and fair value gap, that was birthed in my utilization of S&P trading. It didn't come from a Chris Laurie video. I have stuff that goes way back in the 90s that shows me using all that stuff. Chris Laurie, didn't use all that stuff before. There's a timeline of him coming out of fibs, okay, and going into more price action oriented stuff. And again, I'm not bashing the guy, but I have students in here that are new that listened to me when in a free tutorials and said, go over there and study with him. I'm not going to tell you to go to somebody that I ripped off because it's going to be like stupid. There's terms that are going to sound the same. And if I say equilibrium, that's not the same concept of using equilibrium as George Angel taught with S&P. Equilibrium, the way I teach it, is a specific component to understand how the algorithm delivers price. And there's going to be times when equilibrium is of no importance. Then there's other times when it is important, and it will be a very specific result in price action after it's traded to. Yesterday was a perfect example of that. I mentioned that we would see a continuation lower at London close. Well, that's what this is, London close, right in here. The market trades down into consolidation, so right in here, the day ends. That's what the day divider is here. So control and tap T. You can see the time of my entry for the short, again, was 14:08, and the time was at 17:24. So we're late in the day. But it's when you take a trade with the understanding that we're in a consolidation and the downside is most likely still at play. I'm not worried about these double tops forming with this overall structure here. Now, there's going to be times when I would use these double tops as a next day run up, Judas swing, and sell off. Why wouldn't I expect that on this day, particularly looking at that scenario? Because we have worked off of these equal highs, time of day, and we traded down here, and we didn't run deeper here. If we would have went like 10 pips down here on Wednesday, any run above this here, then I would look for that as a scenario for London for Thursday's trading. But because we had a shallow run here below Tuesday's low, and I'm sticking with the premise that the weekly bias is down, and the only reason why I had that assumption is by how we traded on Tuesday, and that's it. I didn't have anything more to it. There was a lot of displacement here, so I said, okay, well, the bias should be down, and if I'm wrong, I'll know, and if I'm wrong, I'll mitigate it. I used a rushed entry, even though I framed it with a breaker. Everything was explained beforehand about why the stop would be placed there. Everything that was pertinent to this current market structure, or that current market structure back on Wednesday, relative to Tuesday's range, was all explained. And I also mentioned that I would use the same bearish order block to mitigate the loss. And I would seek a 10 pip run minimum below this low. That's what this is. It's exactly down. I think it's 11 pips it went down. Let's see. The low was 1373. And the low over here is 1384. So it's 11 pips. So we went 11 pips below this over here. Folks, I don't care how you slice that. Okay, that's precise. And the concept of knowing when it should do it, that's time and price theory. That's mine. Utilizing the equilibrium. This right here, seriously, let's zoom in here. Price hits equilibrium. This line was here yesterday before the fact. Hit it, stopped. Hit it, stopped. Hit it, stopped. Hit it, stopped. Opened at that high. Traded down. This level right here, 1402, random price level. Completely random to the uninitiated. But it's exactly the high to low 50% mark right there. That's why I had it in there to the pip precision. Naturally, that's what you would expect. If I'm teaching you the reality of how the markets book price, it will be seen in the results. And I'll be able to talk about it beforehand, not refer to it like you've always saw on baby pips. Because I'll be honest with you, back then, I was unsure whether or not I wanted to go where I wanted to go with this mentorship. Like, I didn't know how much content I wanted to give out. So if we know that that was the likely scenario, and the best case scenario would be what? Reaching down to this level, then this level, and then I had 113.50 as an objective to reach for as a best case scenario. It still might do that, because look how we have price action now. We have this low, a little bit lower low, a little bit lower low, and we're sitting here. That's still creating this retail theory of support. I don't see it. It could, but I don't see it. Why? From a probability standpoint, it just looks too clean. I'm not buying into that. Okay, so the idea is that we want to look for price to do certain things around certain times of the day, around a theme or a narrative, seeking orders. It's not reaching for patterns. It's not fulfilling measurements in Elliott wave or Fibonacci based animal patterns. It's not reaching for anything except for where the money is. That's it. And I try my best to try to give you, at the moment, what I'm seeing and how it should pan out. And anyone that sits down and really looks at what I'm giving you here, if they think that this is contrived, if it's not the truth, then they're oblivious. There's no hope for that person, because this is exactly what I prayed for when I started in 1990s. 1992, I sat down and listened to a discussion with my uncle, and he talked about trading, and I knew I had something going on inside that I wanted to get out of the working realm quick, because I did not like being told what to do. I'm a nonconformist, as you probably can tell. I like to do things my way, and it's been that way ever since I grew up, because as a child I had no control of what was going on in my personal life. So when I became an adult, I wanted control of everything in my personal life. And that may be a weakness in some people's eyes, but it's a strength in mine. Because if I didn't have that pursuit to control every aspect of my own personal life, I don't believe that God's ability to bless me with this information and understanding, and all the little things that led up to the chance meetings of people that you will never meet, the things that I learned from the experiences of losing lots and lots of money and bridging those two things together. And then finally, this is it. You don't learn this in books, and you can't learn it from books. You can't. You cannot learn this on your own either. That's why no one's done it besides me, because they did not have the amazing, fortunate, just out of the blue chance meeting of someone that literally removed all of the uncertainty about whether or not these markets are rigged, and then allowing myself the time to go back and look at what I was doing, and I was seeing everything I was doing was diametrically opposed to how markets are booked. And isn't it interesting how every single book and seminar and webinar and teacher, bar none, outside of this mentorship, they all tell you the same crap. Markets don't move on sentiment. Markets are random. The markets are not rigged. The algorithm mindset is ruining the marketplace. No. These are people that don't know anything. They're deceived. They're absolutely deceived. There isn't anyone, and I've paid money to a lot of people. Everyone out there that is well known, I've already purchased what they have. And none of my stuff is in their work unless, obviously, they're ripping off my own stuff now. And you see a lot of it now. But what I'm saying is that there's a lot of well-known educators out there. And I've been in every single one of them. And every time somebody new pops up, I go and I look into their stuff too. My stuff doesn't change. I'm constant. You get greater understanding about what I teach, but it's the same concept. It's the same idea. I'm not adding all these things. Okay, I'm giving you a better sense of clarity about what price should be doing. If I am certain, okay, because I know I spend my own money doing this, I buy in anything that new pops up, seems like there's something new under the sun. It's the same rehashed retail crap. They may not call it what it's been mentioned in John Murphy's book or Alexander Elder's book or anybody else's book for that matter. It's still crap. It's all retail nonsense. There's no one in anything I've ever purchased, ever, from VSA to volume analysis, using supply and demand, Elliott wave, harmonic patterns. No one ever has been able to precisely outline the marketplace before the fact, say where it's going before it's going to go there, when it's going to go there, what time it's going to arrive at that price level, over and over and over again consistently, like you're learning here. Now think about this, folks. You've already been paying me. I'm not selling you. I'm just putting it in context. It's important for you to know that if I see something that is completely unique and something worthwhile, I'm going to point to it and say, check that out. But it's yet to be there. You want to know why? Because you're at the pinnacle right now. You're at it. You're it. This is the top of the food chain. This is exactly what price is going to do forever. I did webinars in the past with other educators. And I've done seminars with other educators, live and recorded as well. And it takes a lot of discipline on my part not to openly correct them when I'm in their presence. But because they have a subscriber base or they have an audience that's used to them, I don't say anything. Here, I'm going to tell you the way it is. And if it hurts your feelings, you need to get over that. Because here, I'm conditioning you for the real world out there. Because no one at the broker is going to say, you made a mistake. Let's take care of that for you and fix that boo-boo. No. Mm-mm. And the broker's not going to call you up and say, here's that winning setup you've been waiting for. Go ahead and take that position. They're not going to adjust your stop in the better location so it doesn't get rated. Everything and everyone is against you but me. I'm not against you. I want you to succeed, and I want you to do well. Why? Because I genuinely care about you, but more importantly, I want to brag. I want to brag to my kids about it. Because my children, I have been doing this for them. And none of my kids trade like I want them to. And you may not have that problem. You may get your children into this and they may do exceptionally well. And I will be envious of you if that happens. When I lay my head down finally, if the Lord takes me out of the world, I want to know that my children can build wealth on their own and not be subservient to a job or something else. I want them to have financial freedom and know that regardless of whatever happens around the world, locally, whatever, that they will be able to sustain themselves and their families and perpetuate this thing going forward, that my future family tree has the ability to do what I'm showing you here. Because there's no greater feeling to know that you do not rely and depend on someone else feeding you because of a paycheck. That's what I hated. I hated that. So when I went into the charts every day, my motivation was, I don't want to do what I got to do tomorrow again. I have to for now. And that was my motivation every single day. But the problem is eventually over time, it gets beaten into you that this is the way it is, and it's easy for you not to study. It's easy for you to say, well, I'll get to it eventually. I'd rather watch this football game or watch this video. I want to watch a movie with my spouse. No, I'm going to go out there and see what's going on at the bar, hang out with my buddies instead. There's always going to be perfect little distractions. They're always going to be there. I removed all that stuff. In my 20s, I did not have a lot of fun years in my 20s. I worked my ass off when I was in 20s. And now in my 40s, I'm kicking back. I'm not working hard. That was my goal. I didn't want to work when I was 40. So what's your goal? When you sit down and you're looking at the charts and you're looking at the concepts that I'm teaching you, are you really motivated properly? Because if you're not thinking about what your destination is, why are you even doing this? Like, what's the outcome you're hoping for? Because if you just want to just dabble here, you're wasting time. Don't waste time. You can't get any more of that back. It's the most expensive commodity we have. If you blow that, you blow it. And there's no refilling it. It's gone. So when I talk to you, I'm spending my time. And my time is far more valuable than your $1,800. I don't really care about your $1,800. I care about the results I'm expecting. I want to be able to tell my children, here, it's not just daddy that's able to do this. These are people that I never met them. They listened to the things, they studied them, they put the work into it, and look what they're doing. I think, and I may be wrong still, but I think that if they see case studies after case studies of individuals that I've personally sat down with through this mentorship, you're listening to me now, if you do these things, you will see a result. Now, how far will that result take you? That's completely and utterly limited only by your own imagination. How much work are you willing to put into it? Everything that I teach has its place. You have all these things that's been shown to you in free tutorials, and now you're in a mentorship. Where do they go? What order do you use them in? Look at the students that are coming to me on Twitter. They'll say the same questions all the time. What order of the video should I watch? Just grab one series and start watching it. What's the difference? Because you're going to have to go watch them again anyway. There's no secret order. There's no magic sequence to all these things because it's been designed that way. Here, in the order I give you the content, from month 1 to 12, that's the order you learn it in. You need to just relax and trust the process, and trust by doing the work every single day, going into your charts, making notations, whether you watched it live or not, study it, log it, and then on Saturday, go back and look at the entire week individually and as a whole, and how everything worked together as a larger weekly fractal. By doing this daily, weekly, monthly, over a full calendar year, you're going to have more experience about price action than any one educator could ever do for you. Period. Hands down. Why? Because I told you what to look for, when to look for it, and now you're teaching yourself to see it. By making annotations in your chart, what you're doing is you're impressing the footprint that I use as an analogy when a dad takes his son out to start hunting. He's not out there with the gun right away. What are they hunting? A deer, a bear, a boar, whatever they're hunting, they need to know where they are. So, are you going to go deer hunting in the desert? No. chances of you finding a deer out there is slim, obviously. But in a wooded area, a hilly area of the country, chances are there's probably going to be deer there or something of that effect. There's going to be something you can hunt. But how do you track it? How do you find it? Because it's not going to come to you unless you know where to put yourself. You put yourself in a kill zone. You find a tree that's along the pathway of where this animal that you are looking to stalk has been shown to go back and forth. Well, what is that? That's a bias. What's the bias? Well, what's the tracks showing? The tracks are pointing away from you. Okay, well, the most recent tracks are pointing away from you, so what's likely to happen? That deer is probably going to come from that direction down towards you. But you have to be what? You got to stay downwind so that deer doesn't smell you. It will smell you before you see it. So think about what I'm doing. I'm giving you a mindset. You want to eat, right? You want to eat on your own efforts out of the marketplace? Well, just like that hunter, he wants to eat that deer. He's motivated. He wants the trophy buck head, as morbid as that is, and I know some of you probably hunt, they want that beautiful animal's head and antlers mounted on its wall, and they want to eat its meat. Okay, to each their own. But there's a process that they have to submit to get to that. And they also have to take that process and make it transferable to their offspring, their children, so they can do the same thing, sustain themselves and their families. All of these components work together as a plan and a process. Everything that I teach you is on a modular level, so you can look at one little piece of the whole thing, understand that small piece, and then look at another piece. Understand that really well, and then look at another smaller piece and understand that really well. And then I'll come back and I'll say, okay, those three individual things that you know really, really well individually, that you don't really know what to do with, but you understand it individually, then I put you in a larger fractal where those three components work together to do another function that brings a greater level of clarity. And then I do that same thing with another single individual component. And I do it another single individual component. Then another. Then now I have three. Then I form them together. And then I have another larger portion of the puzzle with those three individual components. Now I have two segments of the larger fractal that helps you understand what price action is going to do. Then I take those two components of three individual separate components and I put them together. And it makes a greater understanding of your view on price action. That's how I teach it. That's what you're learning. That's why it feels fragmented, because it is. It's by design. There's certain things that you have to understand individually from one singular component view, and then later on, I come back and I bring it back in a larger whole in context, and then you have the aha moment. I already know when you're going to have those. Trust me. You have to trust me. I've been here many times. I've trained a lot of people. Even though you don't see them, I've trained a lot of people, and they do exceedingly well. If what I say and teach wasn't true, it wouldn't be this precise. Nobody gets this lucky. But you won't get this lucky, and you won't be this consistent if you don't do the things and don't do the things I say. So if I say do something, you need to do that. If I say don't do something, don't do that. It's for your learning. Believe me, I am motivated from a selfish standpoint. I need, for my own personal, I just need it for me. I need you to do well because I'm really, really motivated to see a legion of you just literally destroying the markets, just pulling out an obscene amount of money. That's what I want. That was my motivation in 2010 when I stepped out on Baby Piss, because I want that. Because no one really has that. You hear about the turtles and stuff, but that's even though they're managing a lot of money, to me their track record sucked because their hit rate was so low. I wanted to be the unicorn in trading. I wanted to be the thing that everyone knew existed but never finds it. And I believe I have it. I believe I've become that thing. And again, that may be narcissistic sounding to you, but I believe it because the results show it. And my students are seeing it now. And you will have several periods during this mentorship where you feel like it isn't clicking. And that's a normal feeling. But you have to press through that. You got to grind through that. It was just like when you went through school. There's going to be classes where you feel like, why the hell am I even in here? What am I learning? That's all dry education that formed who you are today. You may not do anything with algebra or trigonometry, in your personal life. But those things that you endured learning those helped frame who you are today. It maybe built a level of tenacity in you that is necessary to do what you do in your personal life as a job. Or, if you have a sport that you do, all those things work together. I know the markets. I know how to teach people how to do this. And I'm good at it. And all I'm asking you to do is resist the temptation to flood my email box with 1,000 questions that will be answered in the future content. 99.999% of the time, if you send me an email, I'm going to say that will be answered in future lessons. It sounds like I'm kicking the can down the road. It sounds like I'm putting you off. It may feel like, because most of my email responses, because I get so many of them, I answer them like a text. Like if you send a text to your family member, the way they respond back. Some of you are sending me really wordy, long emails, and I appreciate some of the things you're saying, but I don't have the time to do an equal response. So I don't want anyone to feel like I'm not appreciating the amount of time and effort you're putting into the email or the mentorship. I understand it. Trust me, I know. But I don't have the time to sit down and say, this is what's going to happen, this. It's better for you to stick to the agreement we made when you enrolled, that this is 12 months of core content. Once you have that, the bulk of your questions are going to be answered. Then any residual questions you have will be answered with what we do in the price action models, because most of what you're learning is going to be application based. But before I sit down with you and say, now watch, I'm going to take this and put this together, and this is going to make a model, you're going to ask me, well, what makes this an order block and not that? All that stuff's answered with the core content. What makes this breaker not as effective as it would be reasonably expected? Experience. So there's going to be places where, and here's another thing, don't be put off if I don't answer your question to me in an email, because the intention is for you to have those same questions written in your study journal. And then when you get the answers out of my teachings, you'll go back to that question and write it down, and then you've made a mental note, and it's an anchor point now. You know that for certain because it's been important for you all this time, and you get the answer and you record it in your log. That's a milestone in your learning. You'll never forget that then. But it will create new questions. And those new questions are answered by experiences and things that I teach in the charter membership level. Charter members are still scratching their head about certain things because I haven't completely covered everything. For instance, order blocks. Everyone thinks that I've taught everything about order blocks, and everyone's got their own little course they're selling now, order block theory, how to use order blocks. And none of these folks even know what an order block really is. It's not supply and demand. That's how they're using it, but it's not supply and demand. They have to have a narrative behind it. So the bulk of what you end up getting from me in this mentorship is this vast level of experience on when to do certain things and when not to do them. There's not a plethora of little tips and gadgets that you're going to learn in charter membership. It's the utilization of the things that I teach you in core content that makes you be an independent thinker, and then you know exactly what you're going to do every single day, every single week, every single month of the year. So it was something of a woodshed moment for some of you listening today. Some of you was inspirational, hopefully. For others, it was to try to get you on the same page so we know where we're at, what our expectations are going forward, because I know some of you rushed to get into the mentorship because we closed down enrollment for 2019. But the takeaway I want you to have is, even though I do not provide signals to you, even though I do not get on the internet and do live sessions recording me doing the live account trading, is in no way a dismissal of the things that you're learning here. Because if I didn't understand the market, and if these things weren't the actual truth of the marketplace, they would not be as consistent and on time as they are, to the pip. There may be similarities when you first look at things, because I came up like everyone else. There's still some measure of retail in the delivery of what I talk about, because I have that common association with the marketplaces that you have, because you started as a retail trader. Eventually, when you're in charter membership, that goes away, and it's just pure institutional driven dialogue. There's nothing except for when we expose a retail minded idea and we go against it. But I speak to you in a way where I know where you're coming from right now, and because I've been there. But I have to slowly take you out into the deep waters. Otherwise, I'll scare you away. But trust me, the water's awesome out here. It's nice. It's really, really nice out here. But if you get distracted with the crashing waves around you near the shoreline, you're going to talk yourself right out of this, and you're going to miss the greatest opportunity you've ever had. And I'm being selfish now because I've given out a lot, and I don't want any more people in it. Because everyone's creating courses now. Everyone's teaching stuff now. And they don't even know it. They don't know it. They think they know it. Or they don't have the discipline to follow it. So therefore, well, I'll just make my money back and more money by selling it. I'll rip it off and call it something different. And you see these same people, they're not consistent. They're deceiving people. They talk a good game on the left side of the chart, but they have no idea what's happening on the right side. And how they keep fooling people is beyond me. But it takes a better trader than a good talker to keep people engaged. And here, we don't have a whole lot of these types of discussions in the mentorship. Okay, this is one of those moments where, it's the beginning of the year. We're just now doing a soft start, like I mentioned yesterday. I don't do a lot of trading now. And I know some of you are hoping to hit the ground running in here, and we're going to be talking about everything and all these potential setups. That's not what this is, and that's exactly what I said in the enrollment. You're learning how to decipher price action. You will know what your setup is once you go through the process that the 12 core content months provide, and then another year of working with that in the price action models. You'll be inspired to do one specific style of trading. And don't feel like that's what you have to do. Don't feel that you are stuck in that model only. Because if you start doing that model, it'll groom you for potentially what you never even expected as your final destination as a model or approach to trading. You may think that you're going to be a scalper because you don't want to be in the marketplace too long. You're scared to hold positions, and you change your mind a lot. And all of a sudden, you learn scalping, but you're forced to learn day trading and short-term trading and swing trading. And all of a sudden, boom, you don't really want to be a scalper anymore because you overcome your fear of holding trades, and now you're an excellent one-shot, one-kill short-term trader. You have to be flexible to allow that to occur in your development. I'm aware of it, but are you making concession for that to eventually happening? If you don't permit that, and you're putting a stranglehold, unbeknownst to you, you don't realize you're doing it, but you're holding yourself back with your preconceived notions and ideas of what you think you should be doing as a trader. You don't even know what you're going to learn here yet. You have no idea. Believe me, it's not just order blocks and breakers. There's things that we're going to talk about that make the market very symmetrical. And when those signatures are not in play, that's your key to step back. Don't do anything and wait. And then when they start showing themselves again in price action, you know the algorithms are at work, and it's the same stuff all the time. It's boring. It literally is boring because you know what is going to happen tomorrow. You know what's going to happen next month. You know what's going to happen certain months of the year. You know, because these things are ran by an algorithm that seeks old data and plans future price runs based on old data. That's your PD arrays. So in month number 5, you will revisit number 5 content, month 5 content, more than any other one in this mentorship. If I were you, I would cycle through at least every 8 weeks or so. Go back through month number 5 content. And then every 3 months or so, go back to month 1 content. Bounce between 1 month and month 5. Back and forth, back and forth. And then when you feel the need to go back in the other content months, then do so. But those 2 months, they will help you draw all the other content together. And number 5 month has the most content. It's a lot of stuff there. But that's your transition from free tutorial level, because the first 4 months, that's all this has been. First 4 months is this. If you studied all my free tutorials, this is what you should have gleaned. And believe me, you missed it. Because those 4 months content, that's the basis of where we go in the month 5. Month 5, that's all new level stuff. That's the level of understanding that I never gave away in free tutorials. And that sets the stage for what you become later on. And then we go back in, we start filling in those gaps with specific asset class management and approaches to trading. They're just introductory lessons. Don't think that's all there is. There's a lot more to talk about. I have a lot more to say about stocks. I have a lot more to say about options. Commodities I'm not done with. It's 26 years of insight. And I cannot compress that into 18 hours a day is what I was doing the first year when I made all the recordings for the mentorship. 18-hour days. Yeah. Even with that, every single day, Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday, I took no days off. That was grueling for me. And I only just simply put a little dent in what I have in terms of content. I was hoping I was going to get more into it, but I quickly saw I wasn't able to compress it. So I just relaxed. Say, look, you're going to get so much more than you paid for, and you just got to let that process take its place. I'm not like the rest of these people that ask you to subscribe, keep paying me every single month, and I'll just keep stringing along. No. I need you to just relax and trust what I'm teaching you will get you there. You only pay 12 months, and then you're here. You're a lifetime member. As long as you don't abuse the content, share it, or sell it. If I catch you doing all that stuff, then I'll ban you. There's a lot of people that would, in my situation, keep a monthly subscription. They would drop the monthly fee and just keep milking you. I'm not doing that. And the people that are complaining about me doing what I do, they're running the same type of thing, service, for far less money, because they're hoping that you'll just stay with them for a longer period of time. And they're still going to collect more money than I am per user. They may not make as much money as I earned, but they're still going to make more money per head or per member if they're suckered in long enough. So it's really hypocritical. I got another question, and I'm going to close this video. I have members that are asking if they can operate like a trade room or a signal service once they go through the mentorship, and if I have any opposition to that. I actually give you some framework on how you can do an analysis service and or a signal service, and you can set that up as your own extra income. We talk about those things, and that's other content. Like I'm going to show you real estate stuff, and you probably don't care about real estate, but that's what this mentorship does. It tells you everything that I've ever learned and what I do with my own money, all those things. That's what I'm doing. It's like a little club. It's like I guess it's like the Masons in a way. I'm not a Mason, but it's like that. You're in the clique now, so you get privileged information, and you don't keep paying for it. Once you do your 12 months and you pay your $25 conversion to a charter member level, the first group didn't have to pay that. The $25 is just a way for me to get a documentation through PayPal that you received everything, and now the time it takes for me to have the person sit down and set all your account access to charter member levels. It's extensive because there's a lot of places in the membership forum that you have to be allowed to go to. So it takes time to do that. And there's a lot of you. So it takes about an hour. And I figured, if I'm paying them $18 an hour, that's a fair, it's a fair expectation on your part. And I don't have to have you send me another signed document saying that you got everything. That's what I did with the first group. So now we just do one agreement. You agree to the terms, and then your last payment says that you received everything. So no chargebacks can happen. No, not as described stuff can happen. It's why I designed it that way. So the idea of running a service with analysis, I have people asking about that in the Signal service. As long as you're not teaching my concepts, and I mean even the free tutorial level stuff, because I've had members tell me, well, I'm only really teaching the free tutorial stuff. That's bullshit. You're actually teaching mentorship stuff because you have been trained by me, and whether you like it or not, you're talking like me. And you may not hear yourself slip, you may not know that you're doing it, or you may just think I'm too stupid to realize what you're doing. I do not give permission to teach my content for money. If you're collecting money for a room and you're teaching breakers or you're teaching order blocks, you are literally breaking terms of use. And when I find it, I just kill your account here because I know what you're doing. You're just going to market. Eventually, you're going to market what I do here. And that's not what this is. So there's a way that you can do the analysis, and you can also do signals and never even talk about a breaker. You don't have to talk about order blocks. You ain't got to talk about anything ICT. Nothing. That way, you're not breaking the terms of use, and also you want to have an air of mystery. Okay, if you're in sales and you want to do something that's going to be marketing yourself, and for folks that are not interested, you can turn the video off now because that's all I'm going to close with. But if you're interested in doing anything with selling a service, there's nothing inherently wrong with that if you are good at what you're doing. If you're a fake and you're not able to be consistent and can't prove that, then obviously there's something wrong with that and you shouldn't be doing it. But a lot of the students that first started with me thought that they were just going to be able to do something and be able to wing some fake crap and do some kind of mentor tips type scam. And if you don't know what you're doing, it's going to be rather obvious real quick. And it's a bunch of mess. You don't want to get involved with all that stuff. People would start trying to get their money back, and then they open up a lawsuit or whatever. It's just all that's avoidable if you are genuine. So here, and like I said, I have federal people in the States. They're actually in my group now. So if I wasn't telling you what was going to happen before it happens and operating in the safety of a demo account all the time for that reason, I would be shut down. So there's laws that you have to abide by, and there's also terms of use that you have to abide by if you're going to do those types of services. I give guidelines for that, but you can't do anything ICT related. And then you're probably thinking, well, how am I going to be able to make money on that? Because nobody's going to care. No. If you go on to Darwin X, or if you go on to a forum, open up a thread. Don't even tell anybody about yourself. Just start posting trades or ideas about what you think is going to happen in the marketplace and say nothing. Just put a chart up there. Don't respond to anybody if they give you like congratulations or this is awesome or whatever. Don't even answer them. Be mysterious. That's how I created myself on America Online, and I blew up on America Online because I did that. As soon as you start engaging your audience more, then it changes and it distorts that mystery. If you do your analysis with my concepts, but don't teach it, and you say, it's going to go to this level, and I think it's going to go this as a take profit, and my stop is here. Did you just explain breakers, order flow, standard deviations on central bank dealers range, flout, Asian range. No. You didn't do any of that stuff. Did you mention the seasonal tendency you're operating under? No. You gave them just the raw numbers, because the general populace, they don't have time. The more length that you go about explaining what you're doing, see, in your mind, you're thinking, I'm going to really hook them like ICT does. No. I don't hook my audience with my wordy stuff. And in fact, if you listen, everybody complains about how much, just like you're doing right now, get on with this video, I talk too much. But in all that talking, I'm hiding the real gems, because I know the lazy won't listen. The ones that are really hanging on every word I'm saying and writing down the things that I'm saying, they're the ones that are going to get the lessons out of it. So if you're doing a service, the greatest thing you can do is showmanship. And what better way in creating a sales pitch is intrigue and mystery. Who is this person? Who's this guy or gal? We don't even know if it's a guy or girl. Who is this person? And why are they always right? All of a sudden, believe me, people will take notice. Okay? If you get a small subscriber base following you and you say nothing, like you don't engage the audience at all, you just keep delivering setup after setup after setup. Don't even congratulate yourself. Don't say, I told you it was going to happen. Don't do that. Just do this, one setup, and then go to the next one. The people that are watching that are going to go through the roof wanting to know, who the hell are you? How do you know this? That's how you gather. That's how it's like carnival barking. Okay. I went into Baby Pips with drama. That was my goal. I went in with a wrecking ball. Everybody else is stupid, and I'm the guy on the block that knows everything. That was the avenue I went with. Because in there, it's all cartoon anyway. Look at the place; it's cartoon. So people that were going there, real people aren't going to Baby Pips to learn how to trade, but the common average person was. So if you want that subscriber base, then you go to places like that. Okay, if you really want to have a more mature audience, then you go with a more mature pool of attention. And I talk about things like that in the mentorship, where to get that, and I haven't exhausted that either. But there's other things that you can do to earn money except for trading. And it literally is limitless to what you want to do with it. But I don't advocate people having just their trading income. To have just money coming in from trading is, in my mind, too limited and myopic of a way of building wealth, because wealthy people have multiple income streams. They don't just have one thing, because if that one thing is disrupted either by their own health or their working of it, if it's not several measures of passive income coming in, you are really at a disadvantage, because you have liabilities that can upset that, and circumstances in life that can upset the inflow of income. For instance, if you're only making money when you trade, what happens when you're sick? What happens when life steps in and you're distracted because your spouse or your children have a medical problem and you can't concentrate? You're still going to try to trade, but you're not going to do it effectively, and you're going to lose money. And what is that doing? That's upsetting your income stream. So you want to have things that have a passive income where you're not working for the money. For instance, like this mentorship. I set this up so even if I'm wrong and I can't convince my kids to eventually go full bore on trying to be a trader to get the bulk of their wealth, not what I give them, then at least they have this, and they can use this to get income from. Because believe me, I've already left instructions with them to how to market this, and I have never marketed anything. I just sent tweets. I've never did it. I guarantee you, absolutely guarantee you, if I sat down for 1 month, did live trades, and promoted a welcome mat on CNBC in the form of a commercial, I would literally be inundated with people, and it would be nuts. Like, I have a lot of people now. So you don't want to grow too fast. So if you're going to be doing a signal service and you don't want to blow yourself right out of the water, because if you do it the right way, what I'm saying, you will grow very, very quickly because people are going to be intrigued by what you're doing. Think about it. When I share stuff on Twitter and I show my results, these people are going nuts. And they know it's all demo. But they also know that people aren't this consistent, even in demo. Everything over and over and over again. You want to be repetitive and you want to have continuity. You want the audience to expect the same result all the time. But if they don't know anything about you, that's going to create that air of mystery. And then once you've done whatever that campaign is that you want to build a subscriber base up to, let's do it like this. If you have a trade room and you collect, for instance, like $150, if you do $150 a month or the equivalent in your own currency, you only need 50 subscribers to do almost $100,000 a year. That's a nice passive income. And you only are going to be doing what you already are doing now, trading. This is the move you're expecting. This is your entry. This is your stop. This is your target. You're not going in there trying to convince them, oh, this is the reason why you should stay with me because I'm going to give you all this wordy talk. I want to sound institutional. You don't need to do that. I'm obligated because I'm being paid to do it. If you're selling a service that gives signals, you're selling the signals. You're not selling the analysis concepts. People are trying to create all these courses off of my stuff. Just take that stuff and use it. Or make a trade room. Man, they would make so much money off of that. I just don't have the time and the focus to do it. I get easily distracted because I'm going to talk. Someone's going to say something or prompt me to think about something, and then like a dog chasing a car, because I have a very short attention span, bipolar and attention deficit, it just doesn't work well. I'm a very volatile person, which is also polarizing for my audience members. You either love me or you hate me. There's no middle ground with me. In your own pursuits of running your own services, you want to have the least amount of effort on your part, so that way you're not inundated, and you want to have a slow growth of your subscriber base. That's why I've never, ever, ever advertised. I mean, I got 20-some thousand people on my YouTube channel and just under that on Twitter, and I've never advertised, ever. It's just word of mouth. I don't want to get big. I don't want to get big. And that's the reason why we shut the mentorship down. This is it. Now, I know that creates a demand for people that are selling pirated versions of the lessons. But what they don't realize is buying all that stuff it's fine, but they're not going to get the same level of understanding that you are here, because we will be in 2020 back in live session, but it will be a live session where you can't talk to me because it was too distracting having people be able to reach me and ask me a question, or on their last month and last day have something stupid to say. I've wasted my money or wasted my time or whatever. But I know what I'm doing, and if I'm left to my own devices and thought process and not distracted, I'm really, really exceptional about calling the market. And I want to do it for 1 year, and that's it. Because if I continuously do it, all everybody will do is, in the mentorship, they'll just say, well, I'm just going to create a room and do what ICT's doing and just mirror what I'm saying in there. That's exactly what happened in MIRC, the Merc rooms, when I had my S&P room. I had 1,000 people in this room, and all of a sudden, everybody was doing the same thing I was doing. How's that possible? Because people were selling my signal. And when I said something in the marketplace, we moved the S&P. Not a lot, but when I posted something, in 30 seconds after I said it, the S&P was moving. So the bottom line is I want to do it for my members because I want them to see what it looks like a full calendar year, every single day, what I do every single day, what's my processes, what's my procedures. When I have something happen in my own personal life, how do I deal with that? That's what I'm going to do. But it won't be till 2020. And I'm using that because it's kind of like a little thumbing of my nose. Hindsight's 2020. Get it? So there's a lot of things happening in 2020, but nonetheless, it's a lot of things I have in works right now, and I have a lot of lessons planned for the mentorship for this year. And charter members are going to get a lot more content that from the first year, and the new charter members will be getting 1 month at a time a new model. So you don't have everything a new charter member walking into that status. Next month when you have that membership, you don't have all the price action models that the first group has, because they had to wait too. You'll get one once a month, and you'll have access granted to you each month. You don't have to pay for it. You don't have to do anything. It will automatically update each month. You'll get access to the next one, and then so on. And then once you go through the first round of 12 months of the price action models, after that, then you will literally have the same level of where the first group is. So then, and only then, will you be able to interchange and exchange and talk with that group. But initially, the new charter member group, you'll have access to the same content and the same thread posts, okay? But it's going to be like a forum within a forum. So you are still not able to engage the present first group, which is the smallest group I've had, because only 600 and some completed the first group. We have well over that now. So if we have our focus still focused on the price action models, and the group that went through the initial mentorship, their level of understanding and their types of questions are going to be completely different than what would be of the group that's completed now. So I have my second class charter members right now next month. So that group in its entirety will be in and of itself its own charter member group. So when you post to the forum, only that group sees those questions. Now, I already know what the first class is thinking when they hear this. Well, that ain't fair, Michael. No, it's to keep things organized. I need that to happen, because otherwise I get flooded with a million questions that I can easily manage when the group together is compartmentalized. And once they go through the full 12 months price action models, then use 2 charter member groups will be moved into the same group. So that way now you all have the same common understanding, and now there won't be, well, why ain't this an order block type questions like we got the first time. It was silly. Some of the questions that were being posted, it was like they didn't even watch any videos. And that's just nonsense. I don't have the time, even though it doesn't look like that today. I don't have the time to go through thousands of posts that's probably going to end up being on the forum. I'm not going to be able to answer it. I won't be timely in that. So it's better for me to control the level of influx that the forum is going to have by keeping the groups compartmentalized until they get to a specific level of content and understanding, and then everybody has the general idea. So even if I don't jump on the forum right away and they ask a question, a more seasoned first-year charter member will most likely have that answer, and it'll help them. So the community feeds itself. And whenever things are out of spec, then I can step in and say, okay, in addition to that, or in correction, it's this. That's how I really want to operate the forum, because I won't have the time to answer everybody's post as fast as everybody wants it. So there's still going to be that level of delay. So if you're sending me questions like, okay, I'm looking at the Swiss franc right now, and it's on a 15-minute chart. Do I use this? And you can forget that one, because that's not, I'm not going to get to that in time. And it's going to feel like I'm, completely ignoring you. And it's not that I'm ignoring you. I just can't get to everyone. I'm one person. And even though I have people helping me here run the service, they are not the service. It's me. I'm the brain trust of this. So just like emails, it takes a long time for me to get to respond to you, but I respond to everyone's email, even the free members. So I take the charter members' email addresses. They have little stars. So when you email me, I know you're a charter member, or I know you're not a charter member. I know you're a mentorship student. So when I see those emails, I go to them first. And once I exhaust all of them, then I go in the order I received all the other emails. But everything is in the order I received it. And sometimes that's a little disconcerting for people. But, I think about it. I have a lot of people asking me questions, and I'm doing my best to be, responsible in answering them. And it may not be as long and lengthy as a response or even the answer you're hoping for, but it is the truth. So hopefully our discussion today has been useful to you. We looked at how the market did in fact pan out yesterday, even in a low volatility period. And today, all we did was one more time, we pressed up inside of the dealing range equilibrium. And let's show this one, and I'll close the video. We'll do a Fibonacci. The range is this high because it hasn't been tapped. It's still in right there. Okay, so we have the new low here. We traded down to, ran the 10 pip stop sweep I mentioned yesterday. We got that to the pip. And then what does price do? It rallies all the way back up above equilibrium. Why? Month 5 tells you that. We are now in a premium. So once it does that, what's it doing? It clears the equal highs at that time. What time of day does it do it? New York Open. And then what happens? Price runs down to this low here. And I don't think we're done. I think we're probably going to make an attempt to go sweeping deeper than that. But the algorithm has to go to a premium or a discount before it has a significant or meaningful price move. And we talk about that in month number 5 content, and we will build on that in the price action models in the future. So with that, folks, I wish you good luck, good trading, and I'll talk with you again by way of Twitter in next week's commentary.